Thank you, Julie. Let's go straight to the pitch for the rest of the market roundup. Doreen Mogavero at the New York Stock Exchange. Larry Shover in Chicago, and our closer, Jason Trenner, still with us here. All right, Doreen, closing near the lows of the session here.
We are.
Not a lot of optimism about Washington. Where does it leave traders at the end of the day?
Listen, I think, right up until the end of the year, if they don't get their act together in Washington, we're going to see this market continue to trickle down, 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 down. I mean, it's all about what they're going to do with this fiscal cliff. And I don't think that's going to change. I think it's just, we're depending on people that actually are going on vacation in 9 days, which is a pretty scary thought, if you ask me.
Yeah, you can say that again. Not helping matters manufacturing, right?
Yep, that's it. No, manufacturing today was really what did us in.
So do you think we're going to see more of the same as we go forward this week and we get closer to the jobs number?
Oh, I do. I mean, I don't think there's anything that's going to change the direction of this market until we see some sort of a resolution in Washington, And I mean, the ping-pong game that we saw last week, we're happy one day and we're not the next. If that continues, we're at the headline risk, and I think that will react to always. But beyond that, I think the overall sentiment is if we don't get this thing together, we're not going to be in a good place.
Larry, what do you think fueled the downside today?
Well, right now, I think everybody's just got their hands in their pocket. And what started off as a mini risk-on day today, I think people just realize that there's no clarity. The broad narrative hasn't changed. Just a lot of headlines, a lot of nuisance headlines. And until that changes, it's going to be very technical-oriented. So I think volumes are down. People are afraid to put on positions, and at the end of the day, it's just performance, year-end performance anxiety that we're seeing right now.
And Jason Trenner, as Larry points out, it's all headline risk, and let's face it, between now and year-end, that's unlikely to change. In fact, if anything, it's just going to get worse.
I think you're right, unfortunately. I just saw a headline go across the...
Oh, you did?
I just saw on Bloomberg here that says, Hollande says... Greece is resolved, which I thought was an interesting. I was like, I feel so much better now. It's all gone, and I didn't know that. I wasn't aware that it was all set. So,
yeah,
I mean,
they're going to go buy $10 billion in bonds, and GDP drops to just 150%.
Exactly, you just write off the debt. It goes away. So, listen, unfortunately, I think that's true. I think, listen, I believe that earnings are going to be lower next year for the S&P 500. The real question is whether people are able to look through that. If you get a structural deal, let's say you get something that's real, that really takes the bad case off the table by taking a look at structurally our entitlement programs, there is a chance the multiple goes higher on lower earnings and the market hangs in there. What I'm worried about is a half step, a Band-Aid, if you will, which I think is the most likely outcome.
All they can do, right? I mean, Doreen, between now and year-end, look, I mean, it's Congress. We're hoping for a lot, just thinking we're going to get that Band-Aid. Can we expect anything more realistically than Band-Aid?
I really don't think so. I mean, these guys are so ideologically opposed. I can't see where they're finding the middle ground. Doesn't seem to happen.
Anything more? Are you expecting anything bigger than a Band-Aid yourself?
No, not at all. I mean, the last 3 years, we're used to this. We've had the payroll tax extension, the health care in 2009. We're used to this right now. It seems like it happened the last 3 years. It's going to happen again.
All right, so we kick the can down the road a little bit more. What do you guys think it's going to mean to our credit rating? Doreen, do you think we're going to get another notch down?
I think there's a good possibility that happens. I mean, we already see news today on how badly this is going to affect the states if there's no resolution. So, I mean, I think that's a good possibility.
Yeah, and hey, there could be resolution. Right? We could get that Band-Aid, Jason, but if it doesn't happen in a succinct enough way, if the rating agencies don't feel like lawmakers are coming together in the right fashion, we are at risk.
Well, Trish, let's say we deal with the fiscal cliff issue. Then almost, if they don't deal with the debt ceiling, we're going to be dealing with that debate probably in February or March. Okay, so this isn't going to give us a whole lot of time. And then this is a little different than the last time the rating agencies were out, because all rating agencies now have been on record as saying, if you guys don't get your act together, we're going to downgrade your debt. And you can say this time, well, last time it wasn't so bad. Stocks went up, bond yields went down. But people forget August and September last year were ugly.
They were.
And this time it just isn't going to be one rating agency. It's going to be all three. And I don't think you want to start fooling around with that.
You can only trip so many times before it hurts.
It hurts.
Yep.
That's exactly right.
Indeed. All right. Hey, Doreen, always good to see you. Thank you so much for joining us from the NYSE. Larry Shover, a pleasure from Chicago. Jason.